benefits for qualifying for trader tax status is basically when you rise to a business level, it gives us the ability to write off all our ordinary and necessary business expenses. Does not mean that we need an entity. It just means we achieve trader status, we are now a business, and we can write off our deductions. Some of the more ordinary are trader specific, chat rooms, data feeds. One of my favorites here, home office. A lot of people get scared away from this. This is not a red flag anymore. There are probably more home-based businesses than there are brick-and-mortar businesses. Okay? Education, seminar that you're at right now. I'm going to show you in a minute, as an investor, it's probably not deductible. As a trader, fully deductible. Okay? Startup expenses, organizational expenses for entities. One of my favorites is margin interest. I got a lot of traders trade on margin. You achieve trader status, this is a full deduction against your trading income. No limitations. All right? And much, much more. We go down a very long list here. Fixed assets, of course, current year assets you purchase. But if you're starting a business, don't forget, this goes for any business. If you contribute assets to it, there's a possibility of a write-off there. Okay? Leasing equipment, communications, telephone, cell phones, cable TV. Remember, as traders, if we're out of a home-based business, we don't want to be piggish with the IRS. We do want to take a business percentage. There's always personal to it, so don't be piggish. If you have a separate office, it's a different story. DSL, T1 lines, dial-up. We got our mixed-use supplies, rent-a-home office, legal professional fees, your national trader tax guy, I'm a full write-off for you. Advertising. This is a big one that I've seen in the past couple of years. Years ago, everyone wanted to be a hedge fund. Nowadays, everyone wants a black box. Everyone wants to put together a program. A lot of people are hiring people to write them a program, hiring to do their research. This is a full deduction for you if you're a trader. Okay? Employees, we're going to go over that in a little bit. Software, website, maintenance, and much, much more. So now we're going to compare it quickly to an investor. When we look at an investor and we look at their expenses, it's extremely limited in nature. Okay? Trader subscriptions, investment, data feeds, there's not a lot there. The other thing is, it's only allowed in excess of 2% of your AGI. So if I have a couple that has $100,000, 2% of that AGI is $2,000. If I'm an investor, I only have $4,000 in expenses. Right off the top, we're taking $2,000, right? It's disallowed. I can get a $2,000 deduction. The next level would be if you're in the alternative minimum tax. If you hit AMTI, there's no deduction whatsoever as an investor. It's added back for your alternative minimum tax. Any unreimbursed employee expenses on page 2, including investment expenses, complete add back for AMT. You will not get one dime of a deduction. We just talked about margin interest for my traders. I told you absolutely 100% deduction. Investment interest. If we don't have trading gains to make an election, if we don't have interest or dividends, which typically my short-term traders do not, your interest will be disallowed also. Carried forward, you don't lose it like the AMT deductions, but the interest will be carried forward, used at a later time. And then, of course, as a tax basis investor, you're subject to capital loss limitations. $3,000, and that's it. Everything else is carried forward. And then you're going to hit with the wash sales. Does everyone know what a wash sale is? No. Quickly, I'll go over one. I'm trading, let's say I'm trading Cisco. I got 1,000 shares of Cisco. I purchased it. The cost basis was $10,000, right? I get into December at the end of the year. I think I'm a smart guy. I'm going to turn around. I'm going to sell that near the end of the year. And then within 30 days, I'm going to buy it back in the next year. So what did I do? I just got myself a nice tax deduction in the current year. I bought it back, and I'm substantially in the same position. What the IRS says is you have to add that loss back, and you will be in the same position. Your cost basis then back up. So you're going to be in the same position. You lose out. So I'm going to give you an idea of how to get around that. I've seen some traders come to me and they tell me, but I've got a loss, I've got a loss. We go through, we work up their gain or loss. We apply wash sales, which are regulated by the IRS. If you're a cash basis trader, investor, you have to. And it turns around and they may be flat or they may have an income because of the add back. Especially my traders that like to trade, say, Apple over and over and over again. Okay, the same stock over and over. So again, here, when we're looking at investor status versus trader status, on the investor side, could absolutely be no deductions. The trader side, definitely a ton of savings.